Hey guys, what is going on? So last week was actually a very phenomenal week. There was a lot of momentum going on in the markets, as you probably already monitored. This week ahead, we're actually looking at a little bit more of a development week. But it doesn't mean there's not going to be opportunities, it just means that we have to be a little bit more patient to see that now. One thing we do need to understand is, as we've had, and I'll just use the DXY as an example, we've had this massive sort of impulsive move. It doesn't necessarily mean that we don't stop with momentum. It just means that it's more probable that after these big sharp moves that we see some level of a correction. Now in this sense, I don't think it will be something this large, but again, just something I want to point out that, you know, from time to time, these are the sort of things that you need to understand, that we get these big moves and then we start to correct. Now, as we've seen before, this also is an area where we may even see something quite similar like this, where we've had a drop off and then over the course of the next week we get the correction and it just corrects and pulls all the way back up. Now that is highly possible as well, and I just want to kind of point that out, that we don't necessarily have to continue in the direction of a lot of these impulses. A lot of them may have actually had a deliberate reason to get there. For example, if we just look at the DXY just as a prime example, right, was it just deliberately going into this area to be a part of this larger descend to then go higher, right? And this would still make sense to look for shorts, but we shouldn't completely write off the buys. So as we can see here, you know, it has been like with a 1, 2, 3, and it is giving that sense that, you know, we were really pushing down to get to these areas, and then news came out, which was non-farming payrolls, which comes on the first Friday of every month. It's basically to do with American employment rates, and then that came out and then pushed price even lower. Obviously, we're not here to speculate if price is going to go up or down during NFP, but more so we want to see how price reacts. And now we've had a clear follow through to the downside. That was, a lot of it was news based, and then putting fear into the market, and people just kind of, you know, either opening up shorts or longs on counter related pairs and so forth. So now that we've kind of settled on that, we're going to be going into the next week ahead, and then we'll be looking at what's to come next. So we have non-farming payrolls out the way. We can see that there was a dramatic difference. The forecast was 175, which wasn't so different from the previous, and then the actual result was significantly less, causing the American employment rate to be lower, causing the DXY to fall. Something to just point out there. It doesn't always necessarily play out like this. You know, sometimes you know, you could have, and then news comes out here, and then what happens is boom boom boom, it does this and nobody wins, and then continues and then just does that and then drops off. So, you know, it's one of those ones where you don't want to just open up a trade, put a stop loss here, because even if you ran into profit, this would be within a second. It would have come into profit, come straight back up, tagged you out for a loss, and then come back in and just do this mess, and then you'd be in a heat of emotions in there. So you don't want to be caught up in something like that. So covering just the DXY here, we can see that you know, the more important thing is that we are coming into this area here. We want to see how we respond. We did come in very impulsively, but arguably the most important thing is here we've come in with a 1, 2, 3, and we just want to really see how we respond to this now. What I would like to see is that if this is the structure where we've just come in now, we've just extended to tap into that value area, I want to see a clear follow through back in, and then deliberate price action to the upside. If we are going to be seeing reversals back to the upside, I would want to see something like that, and that would be deliberate enough for me to then take advantage of that to go take the insurance entry on the counter related pairs. So that is basically what I would be looking for on the DXY, but I'm very much aware that if we don't get that, it's very possible that something like this could happen, where, you know, market opens, it stalls a little bit and then drops off, and then we get continuation, and then price just continues to just trickle, make its way lower, and that's just a possibility where it's something that we would just have to understand that it could happen. And by just mapping that out, so we know where we would go for longs and we know where we would go for shorts. Obviously this is the much better scenario because we have a much larger range to work with. But if this does end up being the turning point because of recession announcements and whatnot, then we may potentially just see this really follow through and start selling off, and that we'll get a clear message from the market at that point. And this could be the first sign of price just not really being in a position to really just respond to go to the upside. It could just really be the beginning of a real strong decline, and we'll get clear messages from the market. So we'll have to wait and see how that is, and it's too early to speculate right now. I think the best thing to do is just literally mark on your line in the sand, which is basically here for me, and any continuation above that I'm great and happy with. And then basically this line here, any continuation below here obviously would be a little bit more weighted. I'd be looking for then more short continuation, and that's basically it for me. That's how I'm looking to take the DXY. The JP225 is also a little bit of an interesting one, because what we can see is we've had multiple follow throughs now. Sequence has actually been pretty decent, and the message from the market was very clear. If you weren't able to capitalize on it, which as well at the time, I did find it quite difficult to decipher, but you know, it's always one of those ones when you look back on it and you're like, actually, you know what, that was something which was quite easy and quite clear to see. I just don't know why I wasn't able to execute in the moment or be patient enough to hold through, etc, etc. Because even here I considered the entry, it was just one of those ones where I just let it slide, and just thought in abundance like there'll be a lot more opportunity, but sometimes these things happen and it just drops off, and that's what tends to happen here. So I'm going to be looking at this a little bit more carefully for the week ahead. I would like to see more continuation. Perhaps maybe it could be something which could take maybe another week, a week and a half, but something like that, and then we drop off again. That would be great. I think we might be getting something a little bit more larger now because of where we're positioned, so I wouldn't really be surprised if, you know, price really started to get a little bit more messy, and then it evolved, got a little bit larger, and then even if we got something a little bit more like this, looking at the sequence and how price is moving, it's really in a good position for the next continuation. So something like that I'd be more than happy to take, and then just understand the risks around it, where it could develop, get a little bit more messy, larger, etc. And yeah, I'd definitely be for something like that, especially being so early in the run. I think these are stunning positions. The other case scenario is that we do get a lot more messy, and just grabbing a little bit of price action here, and we get something a little bit like this, where we come in and it's just not the cleanest structure and it just kind of goes. We'd be able to decipher it for sure. It's just you'd have to accept that because of where price is positioned. There's so many possibilities of what could happen. There's no point overthinking it too much. Just looking for clear, deliberate price action right now, and if we can get it, good, I'll be in for the trade. So that's basically how I'm looking at the JP225 now. The SPX 500, I'm basically looking for a base, to be honest. I'm not too sure if this is really going to be a dramatic sell-off. Obviously, there is signs of this really beginning to sell off, because how we have ended, but really and truly, when you look at it from a monthly perspective now, we're at the beginning of the month. This is really looking like it could sell, but because we're at the beginning of the month, I don't think this is it, because this is how you want price to end at the end of the month, for it to then indicate it. I think being at the beginning of the month like this could be a solid sign that we might see something a little bit larger this month, where the momentum really kicks in, it sells, but then it retraces, and within this month you'd probably be able to buy the base of this. But if I'm then looking at this to potentially tap out at some point, if I go back to the monthly, yeah, we're not going to see huge monthly candles like that. It's not very regular. However, so last time we were looking at about March there, June, yeah, possibly we could probably see price come into these areas before we see any sort of pullback on it. So I think if we're looking at a point of interest, that's basically the origin of that large flag to move higher. We've kind of broken below all of that now. I think what we do need to see is more continuation now. So as we can see on the 1, this looks a little bit more nice. If we do see something a little bit more deliberate like that, because I'd personally be waiting for a little bit more weight, I'd wait for something like this, and then comes back up, does that, comes in, and then at some point it makes its way, completes on this, and we get in for the short. And I think that is a trade that I would much more prefer to be positioned on, in line with this, because it holds enough weight for this to then continue into the next move. Now that's a little bit more picture perfect. We may not get something so clean like that. We may even see something a little bit like flat, where I wouldn't really be too surprised with something like that. So I'll probably keep my eyes on for something like this. I think this would be your more probable scenario where you get something like that, and it's just not the easiest to decipher. Perhaps maybe even has a slight expand to it as well. I think that would be a good variation of what we could be looking for. And yeah, I'd basically be looking for something like that. So yeah, S&P 500. So top 6, I've actually gone with less this week. I think less is more this upcoming week, only because really and truly I think there's a lot of development across the market that's a little bit required now. Obviously with news and whatnot coming out, a lot of things can change. So we have news on Monday where if this is very impulsive, then I might do a quick scan, go through my charts, and I might pick and add something else in here. I think with Euro USD it's quite an interesting one, to be honest, because of where we're positioned with the DXY. I think originally we had the 1, 2, 3 great sequence beginning and whatnot. Then it just became quite corrective when you really look at it. Sequence was great, but the thing is, I think it had a lot of opportunity. It was just news that came out, and due to that, it kind of just pulled all the way up now. And I think because of where we're positioned, it makes sense to either look at this in a more evolved light, where you can see it like this, and then understand that we could be seeing something like that, where then we're coming back into these areas up here, but we're coming up quite aggressive. So does it make sense to see a larger correction here, possibly even larger than I forecasted, to then get the next move higher, which then either way, from a flag to pole perspective, it would then look like we're breaking that high. So I think if I then look at it like this, where we call that the high, we want to come back there, and if we're going to meet with this, the flag would really have to have been down here, which doesn't make sense. I think the odds are now is that this is not your reversal or your typical reversal to continue back to the downside. I think we're literally wiping out a lot of the shorts now, and we're getting positioned for the longs, and we now have to shift our bias. But like I said, that's just one way I'm seeing it. It doesn't necessarily have to be the case. We could still see it like this, where it just happens to be quite an impulsive run. We come back up with a 1, 2, 3. We fill this final part here, and then we do reject. And I think that is also a strong possibility. We don't have to come all the way up there, but even so, we just have to wait and see. Because if I invert this for a second, if this does just happen to just retrace and come back up, it just would be so ugly right now that you'd see something like that, where I'll mimic this price action for a second, where if you did get something like that, you know, you'd look at it then, and then I'll invert that back and zoom out. You'd see it like that, where you could arguably say, well, yeah, that is a little bit messy, that's a little bit crazy, that was news, etc. But then, you know, it's one of those ones where it's not this typical sequence, and it's become a little bit more complex. Something like this, where even though that became a little bit more complex and then it retraced, you can see then it just kind of did follow through. So don't be surprised if this does retrace, that's all I'm saying, because it's happened time and time and time again. You know, just news sometimes just comes up, makes things a little bit more complex, and then we just have to deal with it. So I don't want to go into it too much, because you know, we're basically looking at it in two ways. We're either seeing it as, you know, the reversal, or we're seeing it as this is the continuation. And I think I'm more than happy to wait for that, to then take that trade into this high here, which then leaves me with 4.2, and then I can take it into that high with a 6.4. And then if it does break and continue, then, you know, I'm positioned phenomenally for a long, which then causes the DXY to just continue with this decline, and then we look for more continuations to the downside. So I see it more of an original hedge play, where I was originally looking for the short, but now I'm looking at the long, and then shift my bias completely, and I'm going for the long. Aussie New Zealand's actually quite nice as well. So in this scenario where if you compare this to Euro USD, this one's actually been able to tap into an area of liquidity. The value was over here, failed to commit, and then rejected, and now we're looking at the next continuation. Whereas if you look at Euro USD, it hasn't quite done that yet. That's why I'm quite not fully convinced that this is a completed structure just yet. Like, we did tap into this little hook point here, but as we know, that's where a lot of the value and the liquidity is sitting. So are we tapping into this, breaking above, tapping into that, and then selling? That's the thing that I want to really see. So if I see Euro New Zealand now, Aussie New Zealand, I can then see that, okay, we're waiting for continuation. So we had a follow through. Perhaps arguably there was that smaller, tighter version here. Then we had the next continuation, which wasn't perfect, to be honest. I was waiting for this, but I think we didn't quite get it. And then we had that. And to be honest, that wasn't a trade that I was willing to take because of that slope. So I kind of just personally left it. And then now we've just kind of come down. So two ways, this could either be a more smaller, tighter flag, or it turns into something a little bit more complex, takes a little bit more time to develop, and then you get something like that, right? And then you'd have the larger version of what we're looking at there. So that's really the two ways. You either look for the larger flag, which when you look at it from this perspective, it's not really that large. But if we're in a full momentum run right now, and you know, this is going to really sell, and it's going to sell to, let's say, these lows here, then a flag like this would make sense right now. So I'm more so looking for this continuation here, and because it's Aussie New Zealand, I'm happy to take a risk entry, because I know it's not always the case where we get the cleanest, and you don't want to go too tight on Aussie New Zealand regardless as well. So, you know, even with that, I'd probably go 15 pips, and then I'd leave risk open for a bit until we really follow through. So until we're running around about, call it about almost 2%, that's when I would probably be a little bit more aggressive with my management to break even. And then as we follow through, I'd obviously be trailing my stop loss. But yeah, so to the low of this pattern, you know, you can call it about 3-to-1, which I think is more than acceptable in this scenario, because then when you're playing the overall move, you know, let's say we're playing it to the low over here, it's a pretty long move, to be honest, but you'd have to practice your level of patience on that. So to this point here, you could be looking at about an 7-to-1, 15-to-1, and then you're looking at a 26-to-1. Now, obviously, as we've seen over the past few days, last week and the week before, 20% to 30% trades are actually very, very probable at the moment because of the impulsiveness of the market. So you just need to wait patiently for these good trades, and they can really follow through. A lot of the trades that I've forecasted definitely have at least a 10-to-1 opposed to a general 3-to-1 that I've been looking at originally. So, and that's just for the base minimum of what I'm forecasting. So you know, the markets are shaping up phenomenally for these moves. Aussie CAD's definitely an interesting one too. So if I look at it from a higher time frame perspective, what we can see here is that we've actually tapped into this little hook point up here. We've tapped into it. We came up correctively, but there was arguably a structured approach in there, but you know, we're not really going to speculate too much on that. We then rejected, and we haven't really had any clear larger flags just yet, which makes sense. It wasn't necessary, but the interesting thing is, as we got to this low, we near missed it, came up, scooped, left the reference point, dropped off, and now we're correctively coming back up there. This is a really good sign of potentially a 2-touch or an underdeveloped 3, which then becomes something like this, and then it comes back down and then turns into that. and then it sells, right? Where both scenarios I'm quite happy with. I'm just more inclined for this one because this one would shape up sooner, but I understand that if price did get a little bit different, I would have to reforecast, because what I forecasted here is just a more aggressive sort of approach to it. But you know, this could still happen, and it comes in here and then does that, and then what happens is you get your two touch like that, and then internally you get your structure, right? So this is also something that I would still look at. That's the more slower version of it. The reason why I went more aggressive is because of all this news during it, and as we know, news causes volatility, and if we're going to get volatility, where is it going to go? Well, it's going to move towards the two touch. If we do get the two touch though, and we don't get that larger version of what I just showed you, even though we do have that internal, I'm not going to go for the risk entry personally. I'm going to wait for the hover, which would basically be off the three touch. I'd wait for that tap into this solid rejection, and then the internal flag, and I'd go tight on this. It's just my style at the moment of taking these, and then basically to the low I'll take an 8 to 1 or 9 to 1, whatever, and then as we get the follow through, which would be more probable, I'd be more aggressive towards these lows regardless, so probably be out for either 8 or follow through comes in, and as we break the lows, which I think is more probable because of the angle, you know, you could easily walk away with a 10 to 1, and I think that's the gem of this trade, to be honest, is, you know, it's quite an easy one to see, because when it does follow through, it just goes, especially on the short side of things. Seen it time and time again. Sometimes we do get these weird swing backs where if I just quickly grab this bit of price action here as an example, you do get price action like this from time to time. So I've just studied Aussie CAD fair amount to understand that, you know, these sort of things happen. I'd happily take the break even on that, and then just, you know, wait patiently, try get the next continuations and whatnot. It's not always the case where you get things like this happen. They do happen. So yeah, if you take a break even on that, I wouldn't get upset or start over trading or anything like that. I'll just accept it as it was what it is. But if you look at the current sequence of how price is moving, really and truly, it's not bad at all. It's actually really nice. So I'll just quickly grab this little bit of price action, and let's just say that's your tight continuation. You know, that looks like a fairly easy one to manage regardless, if that's how we're looking to move. Right, you can just see, like, in terms of management, you'd originally have it here, then as we broke the low, you'd probably move to that, and then oops, let's just put this on as a larger version of itself and zoom out a bit. And I just want to show you something in terms of management, right? So let's just say this is your larger flag and you're aiming for that low. You can see that, you know, because we're in a momentum fill run, you can see, okay, cool, we're approaching the low here. As we approach correctively, this could still develop, so I'm going to leave it at 6 to 1. And then you can then see we follow through. You can move it here a bit more aggressive. We've got 12% locked in. That then creates this, then drops off. As that drops off, you can then move it, you know, a little bit higher, see it follow through, and then you can see here at this point down here, you'd be running around about 20%, 22. So you'd want to naturally be more aggressive. You could probably block in about 19, which is just below that structure there. But in most scenarios, you'd understand that this could come back and retest this. It's just, this is not most scenarios at that point. And then we're following through. And then as we keep following through, you can see that we left this little reference point. Makes sense for that to tap into that. So I'll just move it up above that structure. And then so forth again over here. You can see that it pushed away around for 35. It pulled back to about 29. So you'd leave 5% on the table at that point, to be honest. But you are aiming for these lows. And you can see because of the run, it's highly probable. In these moments, you'd convince yourself that this could develop and become larger, right? Because you'd have that little point there, you'd see this, and then you'd be convinced that this will come back up, tap into these areas and continue. So you'd then have to leave 10% on the table at that point. I think personally, you'd want to be out for 30, right? Because you got about 35 on the table. You're not going to really let it pull back all the way back to 20, 23. you've left around about 12, 13, 14% on the table there. So 30% is definitely a great number, and you'd be more aggressive with trailing regardless, because you know with a move like that, and we haven't really had those strong pullbacks, even if you look left, actually you've got this more for a reason why you would have wanted to be more aggressive in those areas. So yeah, and that would be the trade management right there, and you'd be out. So I just wanted to kind of cover that there as well, that you can also find a lot of reasons to take yourself out of the market, but obviously you're running around about 35% at that point, and I think this is something that a lot of people should realize as well, that if you get positioned really well with the higher time frame, and I'll just quickly zoom out again. If you get positioned really well with the higher time frame, let's say this is your overall range, and you've got positioned in one of these areas here, it makes sense why you'd want to be a little bit more lenient to see how price develops, and then you'd be able to evaluate how the move is. But like I said, this is not usual. When have you really seen impulsive price action like this, right? You don't always see it, but what we are seeing right now is that impulsive price action. The great thing about this is we do have something similar over here happening, that happened over here, but it's complete different positioning, because even though we've responded from this, we dramatically sold off, and now we've met that low. If we look at that little bit of price for a second, we can then see that even if you did get a position in there over here, you probably would have been able to walk away with a break even personally, even with that 1 hour entry right here. Yeah, you'd walk away with that as a break even, and then you'd wait for the next continuation and so forth. So just something to kind of just look at. I don't think we would have even taken that trade, to be honest, but it's definitely there. There is trades on trades on trades. Just something to point out is you need to know exactly what you're looking for and how you want to be taking it. And I think once you establish that for yourself, yeah, you're not going to have issues with management and all this. I mean, a lot of the time it just comes down to the individual. Look, again, this is just a stunning trade. If I was able to get it, I could still manage it to the bottom of this flag, call it around about 0.85. I'd probably be at break even regardless at that point there. And then over here 1.7, and then you just keep being aware. But 1.7 I leave break even. Around about 3% I'd probably lock in about 1%, and then roughly around about, I'd lock in around about halfway at that point there. So I'd lock in around about 2% here. I'm around about down 4%, and then if we come back down here to 6%, then naturally I'll just want to be out 5% naturally, just aggressive, understanding the bigger move. So that's the thing, like you could see that whole big move and look at the management and everything, but realistically, if you're trading prop firm capital, this and that, you're not going to want to leave 5, 6, 7% on the table. I mean, okay, look, it's 5, I could probably go about 4 and just mark it on there and say that's it, that's my line in the sand. And then if it goes from 6 and messes around here and then drops, great, you're in for a phenomenal trade. So I think the better side of the management here is if it goes to 6, you lock in 4 and then you leave it there and then you accept it, or you go 5. But if that's the fine line difference of getting you out of drawdown, that 5%, then for sure, yeah, just take the 5 and just walk away, or wait for price to drop off a little bit more to 6 and then just lock in 5 aggressively and just let it run. Looking at the next one, EuroCAD. So EuroCAD's a bit more off a reversal, to be honest, where we're quite high up in the run right now, and we've got this point of interest, then we've got that little point just above it, and then we've got this point here, which I think this is the more probable area we'll gravitate towards. But to be honest, last time we went in this area, we sharply rejected. Again, we were here, sharply rejected, and now we're here again for the 3rd time. Are we going to fill this little gap, or are we going to sharply reject? Because what we can see here is that gap near missed this high, which we know is Mechanics 101. We come back up, this one's missed that, and now we've come up again, and now we've taken out that high. But then we also have the gap here. So there's 2 ways I'm looking at this. We either get a sharp rejection here, continuation first, second, third, don't care, get rejection, and then we can get involved and then understand that could develop and come back up. So that would be more of a higher risk play, but then this would be more of my lower risk play, where eventually if we do come back up to that high and then sharply reject and then get to continuation, I'm 100% in that, because then this turns into an anomaly of a trade at that point there. Both of these have such high potential for this to just really follow through to go to the downside. So yeah, so just two phenomenal positions, that could turn out 18 odd and so forth. So more of an aggressive side of things. I think they're both quite high risk, actually, I'll be honest with you, because you're so high up in the run of all this bullish momentum. They're really asking for a lot, to be honest, and I don't really have the best approach as well, I'll be honest with you right now. I just have these areas of value, so when I come in here, it's just very impulsive. So that's why I kind of just want to see strong follow through, 4-hour commitment. Yeah, daily would be nice, to be honest. Late week a bit. Daily just comes up, pushes. Oh, hang on a second. Oh, okay, no. Yeah, daily comes in, just really closes up here, rejects, comes back down here, and then we get continuation. Fair enough, I'll just grab that if it comes in. Or it's the week after, it is what it is. I think that's more possible, that we just really just push up high, close for the day. Monday, Tuesday we're up here. Monday, oh my god, it can happen so quick. And then Tuesday we're here, and I think that's probably the more aggressive play, which then comes in. And then London session, early London session, and then we start following through. I don't know, it's a bit exciting, to be honest, but it's way too early to speculate. Even if we don't get this entry and it pushes through just with aggression, it was very messy, and then it followed through, larger correction here. I think we'd still have enough time to grab it this week, so it's definitely a gem to have on this week. GBP New Zealand, so I was a bit kind of not too sure with this one, because right now it does look like there's this level of this ascend, but then even for this to be confirmed, we would still need to see that. So then I looked at it and I was like, actually this could be a really good pair to just have on watch right now, because if we do get the follow through, even if it's corrective, you still get a pretty decent risk reward, and then you'd be able to go long. So then if I go into the weekly, you can see strong weekly rejection on that value area. Just clean this off a little bit. On that value area, strong weekly rejection, which is nice. In fact, you could even arguably say that is the engulfing off where we are, which is nice. And then we just rapidly got there. And then what we see here on the daily, even nicer, strong 3 candles. In fact, this could probably be the nicest pair we have on watch right now structurally. I didn't even check, but did we? Yeah, even so, this is arguably, you could even say, from a structural 1, 2, 3, right? And then internally 1, 2, 3, right, with all of that. So there's a lot of layers to this, which I really do like. I think not one to sleep on, one that could really maybe not even give us the entry because it's so nice. But yeah, what I am looking for is this. You got the 1, 2, 3. I mean, even the more I look at it, the more I see, to be honest. So I might spend some more time just looking at it. But you've got something like that where it's come in now, that's your area of interest. Then you get internal 1, 2, 3 into that, and then you've gone in there, you'd risk entry that. If you get the correct, not 15, if you get the 1 hour on this, you'd risk entry that. And then if you did get a AFT entry in there or whatever, you'd be in for a ride. But even from this to the low here, you got a 6.47. And then if it does start to follow through to that low there, you've got about 7.3, and then the floodgates are really open with scale. So that's what I'm really looking at, to be honest. I'm really interested in this pair for next week. I think it has absolutely huge upside potential. Just need to wait and see how that shapes up for the week ahead. CAD-Yen, so all the yen pairs are really looking the same. I had to really filter through. I did have like GJ, UJ, all of these ones, they all looked good. At the end of the day, I just picked 4. Didn't want to overcomplicate, didn't want to have too many yen pairs on board. Just picked 4 and then went with these ones. So Structurally, again, you can see that we've had massive follow through. What we can see over here is that now we've cleared that low. We're now trading into this low, but we're not quite there yet. This one right here. So what's nice about that is if you call that the base, we've broken this low now. Are we going to come back and retest that area? So we had that little tiny structure there. We've had a strong follow through. It makes sense for us to see something larger. I will be looking for something like this where if that's the reference point, fair enough. I don't think that's going to be it. It's just way too large then. I think that's the reference point. We come back up, we near miss it, we pull back down, we then take up this high, we still near miss that area there. We then do that, and then you could arguably say, well, this could be a 1, 2, 3. So this would be an area where I would still be on the ball with that, right? Where if we had 1, 2, and then that came in, I would still be sharp to look at an entry from there, mapping out this insurance entry, push down, tight flag, select to go short, and then understand that this then could develop, and then it gives it even more weight, where it then develops into that becomes the first touch, second touch, third touch. I wouldn't want to get too caught up on a risk entry here. I'd look more so for that insurance entry within there to then play this as the middle section leg, to then be more aggressive with that, for that to then turn up and be the third touch, to then be more loose on a trade like that. And then if taken, I can then manage that into the low of that ray line. I've got about 12 to 1, exactly what I'm looking for. Vice versa, exact same thought process on Aussie Yen. Just a tip, what I do tend to do is I end up mapping out end of the week, so then I can see how much time period I've got to work with on some of these pairs. So when I am forecasting, actually I never really mentioned this, sometimes what I do tend to do is because I hover over it, so I hover over it, I look at it briefly, and then I kind of know where on the bottom here where my time period for the week is. So if something was going to shape up and it was going to look really good, depending on where we're positioned in sequence, if the flag was to shape up, where would I be able to get positioned in? Obviously we're in momentum, but right now what phase are we in? We're in a corrective phase, right? Because we need to build up a little bit more liquidity. Now we don't necessarily have to, but it's probable that if we do, this is what we could be seeing. So something I want to point out, so this could easily be a Thursday, Wednesday, Thursday trade. I think more Thursday, but just something I wanted to put in there. EJ, same situation again. You might be asking, like, how did you pick these areas? Just, I think experience as well comes in massively. As you go down, they just become a little bit more clear and apparent, because arguably somebody might pick that point there, which is not wrong. It's just, you know, at the end of the day, it's like there's confluences and layers to it. So if you go off and study it, you'll definitely know it. I think Falcon's definitely the best place to be to gain that experience, because everybody's looking at it in the same way. So you'd ideally want to be surrounding yourself with like-minded individuals, so that and get a really good mentor, of course, even if whatever it costs, you know, just go for it, because at the end of the day, you're building a skill that you're going to have for life. So, you know, what you might spend on, let's say £200 a month right now, would translate to a lifetime of, you know, just having a skill set. And yeah, you know, there's sometimes the expense can be hard, sometimes it can be quite easy for some, but it's not really about the expense, it's about what you do once you do make that expense. And I think that's really the most important part there. So I think these yen pairs are very self-explanatory anyway. We can see what we're looking for. We're just looking for more continuation like we did above here. But the New Zealand yen's the one that I did want to kind of show you, because I did take a trade on here. And I think this was an absolute gem of a trade, in my opinion. I just happened to be a little bit too aggressive with the management, but it's completely fine. And then I believe this was it here, and actually no, it wasn't. That wasn't it. If I just put in the 15 for a second and I mark on this, so just one thing I want to kind of map out here is we broke, and I'll go back to the 1 first. So you can see that we're in a run-off momentum here. We broke that low, right? And then we scooped up, we left that reference point, we pushed down, created a base, and then at that point there, we had something like that, and then we came up, and then when I saw it, I was like, okay, well, that's impulse, correction, continuation, that's my 1, 2, 3. We do arguably have a middle section there. Let me wait for a 1 hour rejection, and then we had the 1 hour rejection there, which was phenomenal. I wasn't inclined to take that as a stop, as a position, because it was just too large. So then I refined on the 15, and then I could see over here that we left this reference point, right? And then I looked at it and went a bit closer to the 5, and then at this point here, that's when I was kind of looking at it closer and waiting and waiting and waiting, and then when I saw it squeezing like this, I was like, okay, that looks like that could be it too. But then when I looked at it like this, I was like, hang on a second, that's enough actually. So then I was like, remove that, let's look at it like this, go back to the 15. I looked at it again, and I was like, looking at it like that, it doesn't necessarily have to come in and tap to that. I think that would be looking for too much. Can I get in with enough protection? And then that's when I was looking at that for the 5 minute close, and then when it came in here, I was like, all right, cool, how can I get in that? And I saw it with 10, and I was like, okay, that's aggressive, but I've got everything I need. And then I took it, and then it went, and I think I got out around about here. I actually got out around about here. And I think overall I probably would have got out around about there regardless anyway. So mismanagement or whatever, aggressiveness, it was there. But then when you go back and look at it, really and truly, it did drop off for around about 10%. So I think even at that point there, you would have at worst walked away with 9. Holding it through to 20, I think that would have been a bit very optimistic, because what you would have had to do is hold through at 10, 12, at a potential 11, and see it pull back all the way to around about 4 to then get the 20. So, you know, that's one of them ones where I just don't think, because at that point there, you could have really been like, well, yeah, it makes sense. You know, we're coming back up. This could happen. I mean, that's way too speculative, but we didn't know it was going to come up this deep, but it did in the end anyway. So really and truly, the proper management should have been for around about 10ish%, to be honest. That's where the real money was made. And yeah, that was it really. So now we're looking into the week ahead. We're then seeing it more so in the site of, are we going to then be getting something like this, where we then get internal continuation and whatnot, and we get it there. I'm not, like I said, I'm not married to this one as well. I think the other yen pairs are still nicer, but again, New Zealand yen is a reliable pair, so I was more favorable to put that one in. I did actually like GJ quite a bit, but in the end I was just happy to kind of filter that one out and look at these ones. These ones have really good potential, so we're just going to wait and see how these formulate, and if we get it, obviously look at that huge push there. This flag here would be quite small. If that developed into, you know, even this, then that would make sense as well at some point, where if you then look at it from a higher time frame perspective, you've got, you know, your 1, 2, and then even if that developed even more, you know, and it took a course of like days, weeks, it makes sense. But I think really and truly, we're not going to be sitting in here for that long, because, you know, where we're positioned. I think looking at the JP225 as well, if this is only going to take, you know, 2-3 weeks to develop, then we may see something quite similar happening over here. But yeah, I think levels of patience definitely are required here. I think you know, this is one that I've actually forecasted into quite late, to be honest. Yeah, I think it's one of them ones where, yeah, Friday comes around about here, so yeah, even NJ suddenly just doesn't feel like a great pair all of a sudden, actually. So I do the same with all of these. Yeah, not necessarily. These ones look a little bit better to shape up. Yeah, I think I'll probably swap out NJ actually. What if I Actually, no. What am I doing? Yeah, this. I think I just need to kind of be just a little bit more patient with it. I think NJ is definitely a gem there. Let's just wait and see how that shapes up, to be honest, because honestly, at this point here, we just don't know. Truly, we just don't know what's going to happen with these pairs. Are we going to continue with momentum? Are we going to get these structures? We just have to wait and see. I'll definitely go for insurance entry on that as well. Wouldn't be surprised even if we got something a little bit larger and we came and tapped into that area there. But like I said, it's one of those ones where, you know, they'll shape up together. It'll become clear in the moment in time. And if you speculate too much now, then you're just wasting too much time forecasting. Obviously, we're looking at the variations, we're looking at the possibilities. When it comes to live market conditions, I just want to make you aware that I remove all of this and I just look at it like that, because I've already done all the overthinking on the weekends. Like after this video, I'll probably spend like another couple hours over the course of today and tomorrow just thinking and doing various like variation or looking at this variationally. I don't really need to, but it stops me from overthinking in the live market conditions, and if that's something that helps, then so be it. Aussie US 100, Aussie 200. Now there was a gem of a trade up here. I'm not going to cover it too much because it is what it is, but I was definitely looking at this trade as just, I made the mistake of not taking the reduced risk entry. Now I knew in the moment that if I didn't take it, would I regret it, and I accepted it, so that's why I don't really care much for it. But there was a trade in here as well, which could have 100% been taken, and yeah, it is what it is. But again, now we're in solid continuation. If you look at it from a daily perspective, what's nice is that we've just had really good follow through. It makes sense for a correction now, so I wouldn't be surprised if price moves sideways a little bit for development. If we did get a retrace as well, once again, it is what it is. You know, you could arguably say that, well, price is done what it needed to do, and now we're seeing something like that. I just don't think that's the angle. I don't think that's the trade. I think the follow through was very intentional. Bigger players getting positioned for a larger move to the downside. Can we capitalize on that? Can we be involved on that? Can we understand early on enough that we are getting bigger moves happening? So that's what I'm looking at right here. Looking at the daily, we can see follow through. Looking at the 4 hour, we can see that, you know, with all of that aggression, we need to get some sort of pullback. How aggressive, I don't know. How large, it's not really going to speculate on it too much. But what we can see here is that we've broken this low after that move. That low was broken. We're through this low and we're hovering just above that low, where I love these scenarios because there's so many layers to where price is going, what price is doing. So how can we really confirm this move? Well, we call that the top, we come back down, we confirm a base, 2 bottoms, we come back up, create 2 tops. We evaluate, is that a position where we could take a short? Absolutely. If we get short in there, we could still take that, and then understand that this could develop into the 3 touch. We'd aggressively be out at that point for, you know, roughly around about 3%. And then at that point there, you can then get repositioned on your risk entry or reduced risk entry. And then you'd be in for another phenomenal run. Now, over there, you know, there's clear signs of a phenomenal positioning. Obviously, even with 25 pips, you could personally, there was a 10-ish pip stop loss in there that I was eyeing up. That's why it's a banger of a trade, a 30% trade. So I would probably look for something similar within here, as well as a scaling once I've got in there at the risk entry protection or whatever, and then I know that I'm playing a 10-1 on that, and then with whatever trade in there, I'd probably be taking another banger. But like I said, that would be the gameplay for Aussie 200. More deliberate, more weighted, more time. This could develop over the course of Monday, Tuesday. If it becomes a little bit larger and more complex, then again, something that requires a little bit more patience. Just let the structure really show itself before you start trying to jump into something. It's because it's Aussie 200, I wouldn't be surprised as well if you got something a little bit like this, where it kind of gave off the impression that it was steep and then it sold off. It's just something that Again, you'd have to just deal with it. If it's not in your trading plan, it's not the way you trade, then it is what it is. But once that steepness has broken through and you get clear deliberate continuations which are in your plan, then you can take advantage of that. So it's not always about catching a trade at the top. You know, even this trade could be a lot more profitable than taking the one up there. It's all about where you position yourself and how you position yourself and what you do when you get into those positions. So what can we see here with a high time frame similar to Aussie 200? We're now getting follow through. We've actually broken this low, which is stunning, and now I'm looking for further continuation on it. What I do like about this is that now that we've moved from the high value area, we pushed up and now we've come in with aggression, we can then see that if we get a clear deliberate 3-touch continuation, we can potentially go short on this. You could arguably say protection above. I think it'd just be a bit that would be the safer bet anyway, but the odds are we'll probably scoop up, come in, and then get a very tight small insurance entry in there as well that you could really capitalize on, and then that turns into a 15-1. But looking at it from the risk entry side of things, yeah, you could still probably get in with a 3-1 on that as well. So the 3-1 is probably your safer entry anyway. If you want to go aggressive, then, you know, situation is up to you. But yeah, this is more the trade that I'm looking for, and then I'd look to play that into the low of that 4-1 or whatever. Then to these lows, be looking at about 8-1. Then if we can get the follow through, which I don't think is impossible, I just think that a lot needs to happen for us to get there. So I'll be waiting for that, but it's more of a slingshot, I like to call it, where you get the first like push, then you get your correction and just pushes again, and then next thing you know, we're all the way down here and you're thinking, what a run, like what an absolute run, how did I miss that, it was so crazy, etc, etc. Look at this. Right, I'm just going to look at this price action for a second, where you get the push, got this little flag that we're in right now, you get that, and then you get another push, it's all the way up here, then all of a sudden you get another push, and then all of a sudden you get that, and then it's get corrective. What we're seeing, we're getting a push here, comes all the way down here, you get another push, comes all the way down here, and then it gets corrective, and then all of a sudden it's difficult. But like I said, there's a time and place you want to really be aggressive and where you want to be taking your entries really sharply, and we're in one of those positions right now. Germany 40 is pretty much the exact same scenario, I'll be honest with you. So if we say that we've cleared even this low here, which is fine, you can see it from a daily perspective, but I think the more relevant area that we're looking at is here. We've cleared that low now, impulsively just fully broken through. If you look at how the weekly and the dailies closed, it's really heavy bodied as well, which is nice. And now we just need to see further continuation, so that's what I am waiting for. I just want to see that really just kind of give me clear 3-touch continuation here, and then I could probably get in tight. I'll just kind of zoom in on that quickly. So I could take the risk entry over here, where if I take the risk entry, I'd be in for a 4-ish, depending on how tight my stop gets. Personally, 40 seems like a good number, 50-40, but it could get in tighter sometimes, 6-1. And then even on this one as well, you could get in a 3-1 with the scaling, and then totaling 9 to 10% on that. So again, another gem of a trade. And then obviously that's not the end of the trade, that is the beginning of the trade, and then you've got that as your next point of interest, where even when you're managing that into the low, you've got 9-1 and 5-1, and then the odds are, because of how this is moving, we're probably going to break through that anyway, and then the floodgates really do open. It turns into quite a monstrous trade. So again, another trade you really want to be keeping an eye out for, because I think if something like this did shape up, I wouldn't really hesitate on it. I'd be very sharp and very, very aware for it. Even if you go larger stop, it's more protection is always better anyway. You want to experience these trades and you can get in. There's multiple opportunities regardless. It's not just about the trade itself, it's about how you can get in safely and protect yourself. So there was a lot of trades in here. As price tapped into that area, this was the area of interest for reversals. I then was actually looking at this as the original AFT entry over here, where I was looking at that as the push down, the continuation, and go. Ended up walking away with 2%, and then it kind of came up, became looking like it was going to go for more continuation to the upside. But then in the end decided to let this one go, and then it just started really following through. Didn't really give me any clear continuation of my liking, so then I left it. But then again, another interesting pair where we've cleared this low here now, that one there, and if you arguably look at that point, we're through this as well, so that's interesting. So what's interesting about this is that coincidentally that would be the retest of all of that, which I don't think is as relevant. I think what's more relevant is we've left that little point over here, we come back down, we correctively come up, we near miss it, we come back up, we fill it, maybe even push up above, come down, give insurance entry, and we can get in safely with 11-10 pips, and then we can trade it to the bottom of that range, which then gives us a clear 6 to 1, and then if we do follow through, we become 13 to 1. So again, another really good trade to be aware of. Could you take the risk entry? Yes, but it comes with a huge amount of risk, because at that point there, we don't know if this is going to develop further, and then this becomes something like that. So for that reason, I'd avoid it, because then if this came up and pushed up further, took you out, and then came back in correctively, became a middle section, and then did something like that, and then that became your, call it your more steep large flag, you wouldn't be too surprised at that point. Then you say, oh, that was a part of that corrective squeeze, etc., etc. So that's one of the main reasons there where I would stay away from taking the risk entry there, even though sometimes it can feel like it's the better trade. In fact, actually waiting for the insurance entry, knowing that you could not get the insurance entry there, it's completely fine, and I think that's where you get better protection. So it's the thought process between all of that. Obviously there was a gangster gem trade up there which didn't commit, which is fine, but more so we're getting the follow through, which is more important. So if you look at it from the higher time frame perspective, you know, where are we positioned, right? And I should have shown you this first, but we've come in with a 1-2 massive scoop 3 accumulation. We're in prime time area now, man. If the markets are really dipping and selling, you getting positioned up in these areas, it may not just be a case of getting in for a few percent. You could even get in with quite a large stop, and you can get away with it. If you get in with a large stop, even so, and then you're holding this a little bit longer term, and then this ends up being the one that follows through, and I don't always advise thinking like that. Even so, this one turns into a monstrosity of a trade, and really and truly it doesn't have to be corrective anymore. Like, we've done a lot of the accumulation, the market's made its decision. Are we going to follow through now? Very highly probable. If we get something like this, we will, and you'd be positioned so well. So don't get too aggressive on something like this if you're not used to it and you don't know how to take it and you're not in a position to. But if you are, good luck. Gold, last but not least. I'm not going to go through all of the pairs today because there was a lot of filtering, there's a lot of thought process, and there's a bit of news coming out at the beginning of the week which I think could turn around a lot of these instruments. So I don't want to just be, you know, again, another week where we over forecast on a lot of things and a lot of price changes and goes. Gold is a very simple one. I'm looking at this to kind of V-shaped scoop all the way back up here. Now I know we do have a near miss there, which is fine, because in fact the near miss actually tapped into this little hook point. I don't know if I can grab it there. So we tapped into this, so it's actually done its job, right? It's come back up, it's tapped into that area of liquidity, and then it's had a massive follow through. Okay. The only other thing that is I'm really seeing right now is that this is just really pulling back with aggression now. It would have been nice, and if we did get something like this, and we had something like that, now that would have been perfect for, you know, a short to basically then look to go short, but we didn't get that. What we did get though is this, and if price then starts to make its way and comes all the way back up while the DXY is going short, before the DXY is ready to go long, then we may actually see this then come all the way back up, tag all-time highs, and then sell through, and then we get the big sell to then play the run to the downside, right? Because right now I don't see this being invalidated. I just see this as, we always know that an M star is possible, right? Where we tapped into this, we then rejected, we came back up, and then we sold. That's always been a possibility. It's just the real question now is, you know, are we patient enough to wait for it? And when you do look at it from a perspective like this, well, you know, borderline 50% came back up, retraced, and then we're going to sell. So I'm looking for that. I think if we do get this, it's going to be phenomenal. I think as well, for those people who are looking for this as the structure, I would say don't get too married to that. I don't think this is incorrect. I just think that if you are going to look at it like that, it'd be more so like this. This looks a lot more angled better for this to then be the expanding into the high to then get the reversal, which again adds another layer of confluence, but I wouldn't get too married to that. I wouldn't hold a bias in that sense. I would just more so see it as one big channel right now where, you know, price is doing that. And I think that's the way to see it, right? Is that price is just kind of doing this and it's coming back up. I wouldn't even see it as a 3 touch. Technically it is, arguably you could say it's there. It's just, I would say that you just want to be more patient with something like this. This could even take a lot more time as well. This may not even go, it may just do that. Yeah, literally it could just do this where it goes sideways a bit and then it kind of just scoops a little bit more and then it gives you more of that, and then you get more of your clear equal space 3 touch. I would say that's a little bit better, and then you take your entries in those areas and so forth and keep getting the continuations go to downside. That would be a phenomenal run. You know what, sometimes I'm a little bit happy when stuff like this happens. Like even though we had the rejection, I was seeing this as a really interesting run, and then this happened and then we had that. The sequence just was not, I don't know if it was just me, but the sequence wasn't really there for me. Something always felt a bit off with gold, and you know, at a time it was really respecting structures and it was really moving, which was nice. And we did get a few good trades in there, but I think in the end, yeah, when we started seeing stuff like this, it just became very clear. There was actually an interesting long trade there, but you would have really had to flip your bias at that point there. And I think one of the clues was obviously this was your 50% area over here, and then when price broke above this, it was kind of more of a clear sign that, you know, we're kind of more on the side of gravitating back to that high. So that was kind of the borderline. We tap into this and then we get the rejection and go. As soon as that was broken, it was just kind of like, let's write the trade off now, because, and it's good we did, because it became more complex in the end regardless. Yeah, there was probably a 10-to-1 trade in here, I'll be honest with you. It was an aggressive play, but I'll be honest with you, I wouldn't have touched that trade at all. It's not really in my plan and so forth. There was just a trade there, but more so we just need to see this follow through now. So could you argue there's a long position in there? Yeah, you could, but at the same time you risk a lot, because again, if this develops into, you know, that it, for whatever reason does this, and DXY is going a bit sideways or whatever, I don't think it's going to be that large. Just as a demonstration, you know, you wouldn't be too surprised for the long continuation. So I would say just wait for that. If you get it, you get it. If you don't, you don't. First continuation, second continuation, third, whatever, it's there. Those are the trades. So that basically summarizes my watch list for the week ahead. I think, and I'll just do a brief scan through this just so you guys can see it. I just don't think that a lot of these pairs really fit my plan at the moment. Aussie US dollar could have easily made it. CAD Swiss just on its run. Swiss yen could have possibly made it as well for continuation. Just doesn't seem very reliable. Euro Aussie, another one which I think could have easily made it. You know, just push through there. Rejection, clear continuation, and we go. Euro Swiss, pullback territory. Euro New Zealand, I think New Zealand's probably going to come back up now. It's very likely because of how it's pulling back. Probably going to take those highs out before we sell. GA, you know what, it was almost where I needed it last week, but that follow through to the upsides just made this more complicated. When I flip it and look at it like this, it does make sense for more shorts, so I mean more longs. So I'm just going to leave that because I'm in between long and short right now, and I think it's not a great time for me to take the trade personally, because my bias can keep shifting quite a lot on it, and I want to see price really commit in one direction before I start looking for continuation. Yeah, GU just a bit messy, to be honest. Even when you look at it a bit closer, there is a trade shaping up in here now where arguably you could say if the DXY just reverses, then that's your trade, and then you basically get this, and then we go. I don't think that's bad. I think that's actually quite an interesting position. I just think that the DXY is not positioned in the best place for that right now, and it could just be gearing up for a proper trap. I think DXY goes short, and then this just continues and makes its way back up here before we sell, and then you can arguably start forcing some sort of structures in there, like that, right? I think that's something that I'm more interested in, to be honest. I'm way more interested in something like this than I am from a lot of the other stuff we're seeing. So I'll be a little bit more patient. And then GBP CAD again, probably to take out those highs and come back in. GBP Swiss. It's a tricky one, man, like, because I was almost on edge with wanting to take it, but then when I zoomed out, I was like, even if I got that, I just feel like looking at the weight in terms of how everything's moved, I would stay away from it because that just develops into something larger. Yeah, there's probably a 6-1 in there, but I got better pairs. GJ almost filled this one on as well. Arguably the same thing with GBP Swiss, you know, could turn something larger, but in terms of stop protection and how much you could make on it, I think this was way better than most. It's just you're really putting a lot of weight onto that, where when I saw it I was like, that's not the cleanest of reference points. What if it's this one? Or what if we actually do become something larger, and then I get caught into some lower time frame sort of nonsense in there? So I kind of just want to take a step back on that one and just wait, because I think the better case scenario with GJ would be we get that, we get this, you know, we get something like that, and then it does that, and then it actually turns into a 3-touch, or, you know, becomes something a little bit more like that. I think that would still be a gem, but then you look at it and it's like, you know, there's a lot to it. It needs to do a lot for me to get to that. So it's one that for sure I'll probably definitely check in towards when it comes to looking at pairs, and I'll take insurance entry in there to go short. And then yeah, that would be the trade, to be honest. Just gonna quickly put this in there. Be looking at it like that, and that would be the trade. There was a gem of a trade in there if you look at that closer. Don't really want to go into it too much, but there was a trade in there for sure, which you could probably have taken in these areas, and could have resulted in roughly around about 10-1 as well. So something to just point out, GJ, even though it's not usually the best pair, this time it did come in with some decent structure. So let's wait and see for this one as well. GBP New Zealand, I'll put that as blue. GBP New Zealand's there. So New Zealand US dollar, I'm not too happy with this one, to be honest. I think this needs more development. I think what we're going to be seeing across a lot of these pairs is probably something like that. The thing about this is, if you're looking at the expanding for the long, it's probably there, where you're now creating the base and then you go. That could be an interesting counter trend trade where you do have the near miss gap there. It's just, again, I'm not looking to go counter trend on this right now. It's in a very subjective area. You're really messing around with these pairs when you're really up and down with it. Just let the price really signal to you, because I promise you, once the DXY confirms and, you know, we've got clear deliberate price action, when you get something like that, there's less objectivity to it, because you know where the DXY is going. So you know, you go with something like that, there's a high probability chance that that plays out. Whereas right now, if you try and take something in there just because you're not too sure with the DXY or whatever, you could just get caught up into loads of stuff and then be like, ah, yeah, there was this little gap, you know, we took out that gap, we left another gap, etc. You'll just convince yourself of whatever. It's happened time and time again for me. So better to just go for something which removes a lot more risk. I think the interesting thing about this is we did tap into the 3-touch there, but we just completely rebounded off it. I think when I looked at it on the higher time frame, psychologically this looked good for the shorts. I think everything that I needed was there. Just in the end, it just happened to be one of those ones where it rebounded, and these things do happen. So something for me to definitely look at a little bit further and just study and just understand why we rebounded there from the trend line and not from anything else. So yeah, definitely I'll mark that one up as yellow for studying. Oh, not yellow, it's orange, but it comes up as yellow. I'll mark it as as blue. I'll check it out again. New Zealand Swiss, yeah, it's all-time lows now, so I'm really trading in just some odd territories. There was a trade in here as well, if you guys saw it, right there, and then obviously it was like part of the big version here, so that was interesting. New Zealand yen, I think New Zealand yen, I've definitely covered that. Yeah. USD CAD comes up high, comes up low, doesn't really matter. It's just going up and down, up and down, up and down. So I'd stay away from this right now. USD Swiss is just really selling off right now. You'd probably want to see something with a little bit more weight, to be honest. I think this maybe might need 2 weeks to develop. Could be one, but really and truly, like, it just gives you something like that. Okay, that's got way too many lows, but something in that sort of weight range where it takes a longer period to really follow through. But given how, you know, everything's moving right now, if this just continues and just doesn't do anything, I wouldn't be surprised either. So yeah, I mean, I'm not too bothered with USD Swiss. I mean, I was looking at that as the low as well, which then lines up with the DXY and stuff like that, and then we rebound from there. It's just, personally, I'm just going to stay away from it because yeah, again, there's better pairs on watch. And then last but not least, USD yen. I don't know if you noticed, but I removed USD ZAR from my list because I'm just not trading it and not bothered with it too much. But same thing with the rest of the yen pairs. Just looking at more continuation. So when I see something like that, just kind of play through. I don't really have the proper reference point for this one, so I kind of left it. There was that point there where I was like, okay, well, and this is the thing, when you cross correlate them all and you start seeing where that is, you can kind of see like, okay, if this was to then come in with a structured approach, or even if it was to do a 3-touch, it would need a lot of time. So this goes into, you know, the week after and whatnot as well. Now, again, it's just one of those ones where I think it needs a little bit more time to develop now. So if I went off and put too many yen pairs on watch, and as we know, they need a lot of time to develop, I've suddenly put 6 pairs on additional pairs, for example, which are not ready to go. The likelihood of me looking to force an entry on that is high, or to remove those and replace them with something else is high. So I was more than happy to just go with less and then not add more on, and I think that's something which is also very important. You have to also understand that I do have another watch list over here for yen pairs, so from time to time I might just go in there and just scan through it and just see how they're all developing and moving, and then go back to my watch list. So just want to kind of just fully point that out. There's a lot of obviously major takeaways happening in the market this week. It's one of those weeks where I truly believe that you're going to have to really be patient and wait for the market to reveal its hand. If we end up taking trades basically anywhere, you're going to lose money. It's a very difficult one. I mean, you know, you can argue that, okay, when there was these follow-throughs, you could just open up a sell. Yeah, but then at the same time, it's not always the best thing to be trading like that, because you can't sustainably grow your trading from just opening random positions at random times. The market's not going to consistently pay you out like that, unless you had like a very full bulletproof strategy built around it. It makes sense, but I don't know anybody who has the data collected to anticipate these massive dips and then basically just capitalize, like, you know, crazy percentages between them. So something I just wanted to point out. Guys, have a great week. I hope you found a lot of value in this video, and if you have anything that you wanted to ask me, you can drop a comment in the comments below and I'll be more than happy to get back to you. Have a great week, and I'll catch up with you